Top Picks is brought to you by Questrade, where you can trade stocks from 1 cent and buy ETFs for free.
And we have those top picks right now from David Burrows. One of David's themes over the past few years has been biotech. Here is one of them, Biogen IDEC.
Yeah, so we own a handful of pharma companies and biotech companies. That includes Valiant, Actavis, McKesson, a whole number. Biogen IDEC is interesting. So the key to this theme is that you've got an aging population in the U.S. that is relatively insensitive to price. Last year, pharmaceutical prices rose 13% in the U.S., some more, some less. Biogen IDEC has the dominant market share position in neurological drugs. So that includes things like multiple sclerosis and, importantly, Alzheimer's. So this is a big area of growth. They have some very important trials that will come up for Alzheimer's in the month of March, which are potentially sort of blockbuster findings. Either they may find that they slow down the onset of Alzheimer's, which would create a big opportunities, or more importantly, could actually show some reversing the impact of Alzheimer's. So this is a company that has a big pipeline of drugs. As the Affordable Care Act comes in, there are more people that have money to spend on health care. And so over the next couple of years, there's lots of additional trials that will come. So this is a theme that we're very focused on. We're focusing in the U.S. market. Healthcare is one of our 3 biggest sectors. And then there's a number of multi-product companies like Biogen that are participating in the growth both of demand and the supply of good new drugs.
You also like technology. This company was in the news last week buying Freescale in a multi-billion-dollar deal, NXP Semis, and this is really geared towards the auto sector, isn't it?
Well, it is and it isn't. So one of our big themes is the Internet of Things. We know that estimates are over the next 5 years, individuals will have as many as 9 mobile devices. A lot of them will be connected to need security. So NXP Semiconductor, their main business is near-field communications chips. So like the chip that's on your Visa card or the one that's in the Apple iPhone that'll allow you to use Apple Pay. So that's a big growing market, and there's more and more of those chips going into mobile devices. A couple of weeks ago, they bought a company called Freescale Semiconductor, which is the leader in selling chips into the automotive industry. So the automotive industry over the next 5 years will average about 10% growth in the use of semiconductors per vehicle. So as we connect the vehicles to the internet and they wind up with ability to communicate car to car for automated driving eventually, we think there's big growth opportunities on both sides of their business. Semiconductors are a leading sector in the market, and people are spending money on technology. So if you look at what this company could earn by 2017, they could have as much as a 10% free cash flow yield, which would be up dramatically from where it is right now. So it looks expensive today. It's about 17 times earnings. But the reality is we think that there's a lot of synergies that will come out of this deal and be real positive for NXP Semiconductor.
Lastly here, David, you seem to believe that investors should be willing to pay up a little bit, pay a premium to buy Starbucks because the growth is there.
Well, we think that the consumer is getting stronger, and they will spend money on things that make them feel good. Starbucks has a very unique customer base, one that they're growing nicely. Their same-store sales recently were up 5% in the U.S. Their traffic growth was 2%, so 7% growth in traffic. Their operating margins were up 12%. So we look for good getting better. This is a great company to begin with, but they are adding new revenues per store by adding more food. They've got their Teavana stores, which are kicking in. They're selling their coffee through other distribution networks. So their demand side is strong. Their new product offerings are strong. And on the cost side, the cost of coffee is down 35% in the last year and actually probably headed lower. So if you believe in the consumer and low energy prices, Starbucks, I think, is a very good investment.
We'll wrap it up there. Starbucks, NXP Semi, and Biogen IDEC. Top picks today of David Burrows. Great to see you, sir.
Thanks very much for having me, Mark.
David Burrows from Barometer Capital. Our thanks to him. Thanks for all your questions. Stay tuned now for Catherine Murray. She is getting ready to bring you Business Day PM. We'll see you later in the day. Take care.